In this presentation, we're going to look at the effect that assets and liabilities have on the net income accounts, revenues, and expenses. And we're going to look at how revenues and expenses are closed through an income summary account and they go into retained earnings. It's important to note here that they got the balance sheet accounts listed here, assets equal liabilities plus stockholders equity, and also have the income statement and the net income accounts, or just the basic counts. So let's look here at this net income flow here. Say we got a credit amount here of $1,000 in revenue, so we close that. If we close that to income summary, debit it, credit income summary, and then it flows to retained earnings. You debit income summary, and you end up with a credit amount in retained earnings. So a credit here in revenues ends up as a credit in retained earnings. Now let's look at a debit here in expenses. So at debit in expenses, we close that by crediting it, and then we debit income summary, and then that would credit it to close it to retained earnings, and we end up with a debit here. So a debit here under expenses ends up as a debit here in retained earnings. Okay, what I'm showing here is a template that can be very useful for you when you're doing your homework problems or any problems you have in your text. Here I got the balance sheet accounts set up, assets equal liabilities plus stockholders equity plus net income or income statement and net income accounts off here to the right. And then for each one of these little T accounts, I have the debits, either a plus, or the credits a minus, what they would be. So I'm going to go through here and look at some assets and liabilities and their effect on revenues and expenses, and then how those flow into retained earnings. So just to show you how a template like this can be very useful. Okay, let's look here at a current asset here. Let's say it increased here by a debit entry, it increased by $200, and let's assume that the associated credit entry, balancing credit entry, would be to revenues. It either increased revenues by 200 or decreased expenses by 200. Knowing that we have a credit entry here, the closing entries at the end of the period would be a credit entry to retained earnings. So we know that blindly. So let's just look here. If we had a credit entry of revenues, it increased revenues. We have a credit entry for that to retained earnings, it would increase retained earnings. Say here we had a credit entry that reduced expenses. We can go over here, and that credit entry would be to increase retained earnings. Makes sense. Reduced expenses, we increase our retained earnings. So let's go back here and look at a liability. Say a liability was credit amount here of $200, an increase in liabilities, and then the associated entries here would be either revenue or expenses, would be to debit or decrease revenues, or debit or increase expenses. Now we know that the end of the period closing would be to transfer them over here to debit retained earnings. Well, we got a minus amount here under retained earnings. So in either case, we reduce retained earnings by $200. So that's how this template works. Okay, following on here, let's assume that we had a credit entry to assets that reduces assets, and then the associated debit entry would either be to debit reduce revenues or debit increase expenses. And then at the end of the period, those debit amounts get carried over here into retained earnings. So in either case, it would reduce retained earnings by either $400 for the revenues or $400 for the expenses. Okay, then let's just look at liabilities here. A decrease in liabilities of $400 would be a debit amount here. So our associated credit would be to either revenues for $400 to increase revenues, or credit to expenses to reduce expenses. And in either case, they get moved over here in retained earnings at the end of the period, and it would increase retained earnings. And a template like this can be very helpful when you're doing your problems, and you can follow through it real quickly and come up with some quick answers when you need to. Okay, Here's, to follow up with what I was talking about, here's a template that I've been using, and you can use that as a reference. And I want to point out that each little T account here, you got the debit showing what value it is and the credit showing what value it is, depending on what side of the equation you're on and what you're dealing with here. All right, here's another template, same thing, only in a little bit different view. Otherwise, the debits and credits are all defined.